If you are a home buyer looking to buy a house in today's crazy seller market, we're here to help.
Hello, welcome to More Than Home Podcast. I'm Lindsay and that was Hans. And we're super excited about our guest today. We have the regional manager from Texas Tech Federal Credit Union, Shaun Schimmelman. Welcome to the podcast.
Great. Thank you very much.
So
Thanks for having me out.
Yeah, absolutely.
Shaun is taking care of tons of our clients. He is super good at what he does. And I think maybe just, can you speak to start right off, like how long you've been in the business?
Sure.
I think that's huge.
So I've been in the mortgage industry for 20 years.
Yeah.
And before that, just general finance.
Mm-hmm.
So I've seen the ups and downs, the crash, lived through all that. Been with Texas Tech Credit Union for 2 years so far. And, it's really been expanding in the Dallas-Fort Worth market. So we're excited about that.
And we're kind of in a bubble here in DFW as far as our extreme highs and lows are a little bit different, but what we're seeing right now is a high, really unlike we've seen as far as it being a seller's market. What kind of things are you seeing that's helping buyers get into homes right now?
like you said, it's very challenging. So we have a lot of people that are pre-approved for a home, but they can't find a home or they can't win a bid. So really, it's you really listen to your agent because they're going to advise you on the best offer to get into that house.
Right.
I know one agent's actually starting hosting auctions at the homes just because, it's a little bit different.
There's so many people too.
There's so many people
through,
trying to buy a house. And it really, the higher price points you're looking at, the less buyers usually filters down, right? So with rates they are, a lot of time you can afford a little more house, so maybe press that envelope a little bit higher so weed out some buyers.
Yeah, one other thing we wanted to note is that we have a lot of sellers that are like, hey, if I sell my house, where am I going to go?
Right.
So what we're kind of seeing is people really kind of parlaying that cash that they're making over and above what they would have made into the home that they purchased. So like you said, they're kind of stepping up a tier that maybe they didn't expect to see. So that is an option as well.
And I feel like we should just back up for a second and just speak to the market and kind of like it is so crazy and it's in all price points in all areas around here. And maybe you could just tell us, like, why is the market like this? What are some of the factors?
Sure. So, coming off of 2020 with COVID, the unemployment rates went down and that changed. Interest rates were just so low, right? In 2020, they were all-time low in history. You could get a 15-year loan at like 2%, so
Crazy.
People were out buying houses because they can afford so much more house. And then they were getting good offers for their current home. So really those low interest rates in 2020 really drove the purchase market. And now it basically people were buying up all the properties, right? Because the rates were so low. And so what it is, that depleted the housing market. So now going into 21, all those houses were depleted because of the low interest rates in 2020 and Q1. And so now there's just a lack of homes. Builders are trying to build as fast as they can, but
they're trying.
They're trying, but right now it really that just depleted the housing market because of the low interest rates. So people that normally wouldn't buy a home or waiting, that was their opportunity because rates were so low.
Right.
So you could talk to every company and their numbers. They were all 2020 was rough, but their numbers were so high in the real estate market because of the rates and everybody was buying. Right. So now that just kind of took up all that inventory. So now going into this year, there's just not any inventory left. And then the ones that want to sell their home, they're afraid because they can't buy another house. They can't get into one. Right. And I have two buyers that sold their homes and now they've been struggling to find a new home for 3 months.
Oh my gosh.
So that's been the challenge. And kind of what led to that is just that depletion of the market in 2020.
And I'll say one more thing as far as that. One thing that we've actually seen buyers doing to win deals from sellers is offering them a lease back until they find a house because everyone knows, hey, the market's just silly right now. So that there are ways. We are winning deals. Don't freak out if you're a buyer. He's still doing tons and tons of mortgages. So, the market is doable, but it is challenging. So that's where Three Vine Group and then Texas Tech Federal Credit Union. Oh, it hurts so much to say. Fight Texas Aggies. It's cool. Anyway, but yeah, no, it is still doable, but it is definitely a challenging market, and it's it's unprecedented, and it's kind of fun. Mixes it up for us a little bit.
True.
But let's speak a little bit to Texas Tech Federal Credit Union. What do you guys offer that maybe sets y'all apart? I know that you've worked some miracles for some of our clients, so tell us a little bit about what makes you guys different.
Sure. So a credit union is different because it's owned by its members, right? It's a nonprofit company owned by its members. So it's different than a bank or any other financial institution in that aspect. So a credit union, you don't necessarily have to be a member of the credit union to get a loan with us. You can either have gone to Tech, a family member affiliated went to Tech, anything to do with work for somebody, a Tech entity, or if we're going to close a loan for you, you can also be an alumni follower. We'll set you up with a link to do that, and then that will allow us access to do loans for you, and also banking as well. So that way you can take advantage of it. And so with the credit union, the benefit there compared to a other traditional lender or bank is they usually, because they're nonprofit, they have lower rates, they have lower fees. Therefore you can get more benefit. Plus we are a direct lender. We do everything in-house. So we also have what we call in-house lending. So that doesn't fit. Say you have a loan, you don't fit necessarily in the Fannie, Freddie, VA, FHA type box. Maybe you're self-employed and you write everything off, right? So a lot of my clients are high net worth clients that do that. They take advantage of the taxes, they write everything off. But unfortunately, when you go to get a loan through conventional methods, you can't get approved because your net income is so low. We call those make sense loans because you have a good gross income. And so we can do those in-house as well. Right?
Yeah, so, it's like the creativity of loans that sometimes you don't get with like a traditional.
Right. A lot of lenders actually come to me because they can't get a loan done and they still want to help their clients out. So that, hey, can you help this out? And so that's where we have that niche to really help those type of clients as well.
Yeah.
That's very cool.
It's super nice because I was going to say that the market is crazy, not in just certain price points. It's in all price points. We have clients in like the 2s and 3s up to like 2 and 3 million. And it is like that all across the board.
Hyper competitive.
Yes, it's crazy. So there's a lot of like self-employed stuff going on.
Yeah. And like you said, Hans, there's still a lot of business, a lot of houses that we've done. It's just we don't have the luxury we used to have. It takes a little more work to get into a house these days, right? Just because there may be more offers on that home.
More time.
And a little bit more limited, inventory.
Yeah.
But we're still, getting people in the house.
Yeah. I mean, you were saying even for 2020, like you had a monster year and it's not what you would have expected with the pandemic going on. And we're the same way. We're on track to have our best year ever in 2021 coming out of it. And it's just like, oh, okay. All right, we're figuring out a way to do it. So
it looks different.
Definitely still here to help everybody.
So what about first-time home buyers?
Sure. So a lot of first-time home buyers, like I said, we saw a lot of those coming in 2020 because of mortgage rates. Because they're like, wow, I can afford $200,000 more in value on a home because the rates are so low. We do have a lot of programs, whether it be FHA offers a first-time home buyer program. Fannie Freddie also does, so you can do like 3% down with those for first-time home buyer program, which may be a little bit different. There's a lot of other things that are geared toward that. So some first-time home buyers may not have the assets for the down payment. There's a Texas program called T-Shack that actually can give you up to 5% of the down payment. So that way, it's a forgivable bond basically. So after you live in the home for 3 years, they forgive it. So it's basically free money for you to get into a home, right? So that's been a big benefit for some people that may just be lacking the down payment. But as far as if you do have the down payment, there's still a lot of great conventional and FHA programs to get into a first-time home as well.
Did y'all see any major changes with the change in administration at the beginning of the year?
Mainly just the market change. The interest rates obviously went up a little bit. Part of it is due to the administration change. Part of it is due to the unemployment rates came out and people are getting jobs again. Therefore, that brings rates back up. So it's kind of a combination of both of those. Plus, the stock market's been going crazy. If anybody follows that all year, so that's been influenced by a lot by the administration as well.
And I'll say, speaking from experience, the last house I bought was 2012, and it seemed like a much easier process than what the feedback we're getting from buyers today. So what, I guess, kind of what expectations should we as realtors help set with our buyers so that they're not coming to us saying like, Shaun asked me for this again, like that kind of thing. That's what we're hearing right now.
Right.
Is there something like, do you guys give guidelines or kind of like try to paint the whole picture for them? What's y'all's process with that?
Right. So a lot of lenders and agencies, say Fannie Freddie, have their guidelines, right? They require, and they get more conservative the way, basically with the market. So they get more conservative, asking for more documents and things like that. A lot of lenders have what we call overlays in the industry, and that's where they take those and they add on some, be more conservative to double check everything.
Yeah.
So that makes it a little more of a tedious process because they come back asking for more and more documents. Us as a direct lender, we don't really have any overlays. It's pretty much those guidelines. And then with our in-house loans, it's a little bit easier than that. Right. So that's where it can be a challenge. Is mainly it's just because of the market and those overlays that are put in place just to be more conservative. Right. Since the crash, those overlays went to the extreme, and they've been kind of tiered down a little bit, but we still deal with a lot of those overlays. That can be challenging. Us as a lender, I try to set my expectations with my customers that, hey, this is the entire process from start to finish. Kind of lay it out so they know what to expect.
Right.
And then we have great technology within an app system so they can look at it and see exactly which documents they need, what they're pending, so you can upload them. It makes it a little bit more transparent for your customers so they know the process. A lot of companies may not have that, and so they don't know what's happening next. They don't know what they're missing until maybe the last minute they ask for something.
Totally. We get that. So let's talk advice. What would be your advice for a buyer? And then also what would be your advice for a seller?
That's a big question. So as a buyer, like I said, the market is great right now. So I advise, best time to buy, right? Because you can afford much more house. You can stay in that house a lot longer. Plus, with the way they're appreciating with the value, it's crazy how much they've gone up in the last 3 months with appraisals and the bid market, right? So definitely, I wouldn't hesitate and just get into the house, while you can, because you're going to get into it at a good interest rate and a good price point, because the appreciation is going to continue to go up, right? Interest rates, kind of a tangent to that. So the Bankers Association of America said the interest rates should top out at like 3.8 this year for a 30-year fixed. They said they're not really going to go down. And most of the agencies are trending they're going to be that. The average is like 3.375 is where they say they're going to average this year. So they'll tick up a little bit throughout the year, but don't expect them to go down. But 3% is still a good interest rate. If you look at the historical rates, that's still an amazing rate to get into. And if you can afford like a shorter term, a 15-year, you can definitely get down to twos. So, definitely is still very much a buyer's and a seller's market,
right?
Obviously. So a seller, I mean, if you can find a new home to get into, or maybe you do that, then it's definitely a good time to capitalize on, the appreciation of the house.
Right.
But buyers, it's a great year to buy.
Yeah. And we're seeing a lot of refinances as well. People that are saying, hey, I've got a ton of equity in my house now. Let me talk to Shaun and see what, see what I can do with that. Because they, cash out, pay off debts, or, go buy a fancy boat or whatever it is they want to do. That's a good opportunity right now.
Yeah, for sure. I mean, refi's have been really busy this year.
I want a boat. I want a boat real bad.
He talks about boats all the time.
We'll have to get one.
Yes.
But kind of rule of thumb for refinance is if you can drop your rate by 0.5%, then it's going to be beneficial to do it. A lot of people are able to get a cash out and then still drop their rate down. So a lot of people too, with that interest rate so low, they're like, okay, I can get a 3% loan with getting my equity out. That's cheap money. You could invest it and make higher percentage.
Right.
So I just want to recap that real quick. So if somebody's at a 3.75 interest rate and all of a sudden they can drop to a 3.25, that makes sense for them to go ahead and do.
Benefit to offset any of the closing costs, go through the whole process. But you're having enough savings that'll be
that's a great metric. Thank you. Very cool.
It's very good.
All right. Nice.
What else? What else we need to talk about? I mean, what other kind of are there any special programs that you want to tell the people about, or?
Really like the T-Shack was a great program. A lot of people don't know about that program. If you're a first-time home buyer, it's great for the down payment assistance, because where else can you get 3 to 5% free money to get you into a home?
And that can overlap with other the first-time home buyer programs that you have for the mortgage that gets it down to 3%, and then you can overlap T-Shack up to 5%. So Really?
Yeah,
It's
and
like
say
no
you
down
do,
payment.
say you do like a 3% down,
Mhm.
and then you get 5% T-Shack that pays your down payment plus some of your closing costs
Yeah.
and
Right.
escrows. So I've had some clients who come to the table with nothing
Yes.
because it's all paid for.
Yeah, we've seen that a little bit.
So that's a great benefit. And T-Shack is designed, it's a Texas bond program. So it's
Yeah.
designed to stabilize our economy and get people into houses.
Mm-hmm.
So it's a good program for those.
How would you say Texas differs, like just in your mortgage world, from other states?
So I lend in 48 states, everything but Alaska and Hawaii. And like I said, I've been doing this 20 years, and Texas is by far the most stable housing economy we have. Mainly because of its percent of appreciation. Plus, they have, say, home equity laws in place here, and some other states are actually adopting that, where you can't draw out more than 80% of your cash out of your home.
Yeah.
And they do that to protect people from foreclosure, getting upside down in your home. That you always have that 20% equity. Like you can't come in and take all your equity out of your home, right? Some states allow that, but Texas has put a protection with that.
Yeah.
Plus, the cost of living here is amazing compared to other states.
Yes.
Right.
Oh my gosh.
You just can't. Obviously, you see the influx of California coming in this year and last year because they're looking at the tax benefits plus what you can buy as far as housing. So that's only going to continue to drive up the market. So right now it's a great time.
Yeah. Agree. What about investors? Are you seeing like a lot of investors jump on stuff
Sure.
right now?
Probably like half of my clients are buying investment homes.
Right.
Mainly because they want to keep them to that short-term appreciation. Either keep them for the net cash flow, or they're looking just for an investment to turn around, flip it in a couple of years, make the money. So it's a great investment market as well.
Yeah.
A lot of investors I work with are buying VRBOs just because they're cash flowing a lot these days.
Yeah.
I've worked with some VRBOs. I have some as well, like different vacation spots, and that's kind of the new trend for investments,
Right.
Because they are cash flowing quite a bit. It's just different benefits to long-term renters versus short-term renters.
Yes.
You can get somebody that's going to pay you for a vacation on $500 a night.
Yeah.
You can cash flow a lot more than
Heck
you would with a full-time renter.
Yeah.
Right.
That's awesome.
Totally.
So obviously, if I recommended Texas Tech Federal Credit Union, they're super awesome. But seriously, though, know that he's done really, really great work for a lot of our clients. So let the people know, how can they get a hold of you?
Sure.
What's the best way to reach out?
Sure. We have our website, texastechfcu.org. They also show my business card. You can go on there and you can borrow on the website. You can apply now. You can see my picture and click right below it and apply on there. It automatically, it's a very intuitive system. It automatically sends us alerts that you've applied.
Yeah.
Or if you just have questions about the process, we actually have a home buyer guide on our website. It shows you the whole process, what to expect if you're a first-time home buyer.
That's a great
a lot of
guide,
education on buying a home.
Yeah.
And so that's a great tool to download and see if you have any other questions as well.
Hans, do you want to put the helmet on or?
Yeah,
No, I'm good.
It?
I did want to let everyone know I'm starting officially fighting Texas Aggie Credit Union. No, I'm not at all. That terrifies me. But no, I did. I guess we have a signature question, but it's kind of the same because you're in the business. But when people find out we're realtors, they always want to know, how's the market? So when people find out you're in the mortgage world, banking world, what's the number one question that you get?
A lot of the interest rates. Where are rates going?
What are the rates? Yeah.
Right.
What is the rate? How much can I get
right now?
When is that going to change?
Exactly. So, it's just like the stock market. I don't have a crystal ball, but we go off like the Mortgage Bankers Association, a lot of analysts, companies out there that tell you where it's going to trend. A lot of the interest rates are really built on the 10-year bond, unemployment rates, things like that. And that's why they dropped so low last year, is because the unemployment rates and they're trying to stabilize the industry a little bit, give everybody a little more cash flow, stabilize the housing market. Plus, we're still actually recovering from 2009, honestly.
Really?
So I always get questions about the modification servicing side too, which I've been in as well, because they keep extending the modification programs to keep people in their homes, which was perfect for COVID because people were unemployed. Right. So they help you modify, put you on a payment plan, keep you in the home, and that's built to keep people in their homes. The last thing a company wants to do is take your home. There's really not much money in it like people think, and they get incentives from the government to keep you in your home, right? So that's a benefit to do.
It's good to know.
Yeah.
Yeah.
Great
So
stuff.
interest rates are the biggest thing.
Yeah.
So,
Yeah. No, that's good. All right.
it.
Well,
Cool.
as always, if we can help you out, hi@threevinegroup.com is where you can reach us if you're looking to buy, sell, build, invest, any of those things.
VRBO.
VRBO. Yep, that's one of the trendy investments going on right now. So, yeah, thank you for joining, and we'll see you on the next one.
Thanks.